Hamilton Canadian Financial Yield Maximizer, or HMAX, right now is at 12.76. It fall about 0.78 of percentage, which is about 10 cents. So when he came out incepted, it was about $16. So we can see it was at 16.24. It came down on the March 13, 2023. That was the biggest drop. It dropped from between 16, it came all the way down slowly to almost 14. So it lost about almost $2. And then from there on, it kept falling down, and there was a little drop that on the June, and there was another drop on August, and then the biggest drop actually has been dropping between since September. There was you can see the slope down, and right now, as of today, this is the lowest it has reached since inception of this fund. So we're going to look at the reason here why this fund keep falling, and what should you do. I will look at the previous close was 12.86, and then open at 12.91. Bid was 12.75. To asking price was 12.76. So it's this spread is very low. It's only 1 cent difference. And when you look at the day range, it's 12.70 cents and 12.91. So there was like a big little bit swing there of almost 20 cents. We look at the 52-week range. It was 12.70, which is the lowest, which was today. Actually, it fell the lowest since it was incepted, and the highest, it went all the way to 16.90.95, almost $17. And volume is about you hover about close to 200,000. And of course, the inception date was January 20th, 2023. So pretty much this year. We now look at the HMAX. If you don't know about HMAX, this is we call Hamilton Canadian Financial Yield Maximizer, which invests in financial companies, and then of course they do write cover calls. And this fund does not use leverage. Yield right now, current yield is about 15.82, so that's a pretty big yield. When it comes to when you look at the sector, of course, it does asset management is 9%, but the biggest one is the banking, and that's the kind of reason I want to tell you why this fund keeps falling. Insurance is about 20%. So insurance and banking, they're pretty much all financial, right? So we look at the interest rate right now. The interest rate keeps going up, and that interest rate actually has massively impacted these stocks or underlying stock that HMAX is investing under, or the exposure that it has. It has massive on this type of stock. You can see here, for example, Royal Bank is the biggest bank. Royal Bank right now is the lowest. It has fallen massively, and then TD. And because this company, it does not, this fund, ETF, HMAX, is not equally weighted. It has more on for example, on Royal Bank and TD and BMO and BNS, Bank of Nova Scotia. These banks, they fall. Their stock crashed massively, and then that's why these funds keep falling. So, and then of course the impact of these, of course, impacted the yield market itself. And the reason why, of course, these banks keep falling is because of interest rate is very high, and these banks, they have a massive amount of debt, and then they haven't done well during this time, and that's the main reason why this fund keep falling. But even, by the way, even if it keep falling, if let's say you were to reinvest all the dividend, you still kind of par with the market. But if you're taking the money, of course, your money kind of comes, you kind of lose your capital. So then I hope this fund actually will go back to where it is at $16. That's to be seen based on the on these stocks that they invest under. So when the interest rate actually stops, and then maybe the Fed start actually lowering the interest rate, of course, the banks might have that debt pay off, and they will go up, and therefore this fund will start going up. But when that happens, it's something that is to be seen, because if you feel like the Fed will actually start cutting interest rate, which is not going to happen actually until 2024, that's biggest prediction is going not the rate won't start being cut until 2024. That's analyst expectation. But because this fund here has the 50% cover call on the stocks, and then it has a 50% on the growth. So when those stocks start coming up, you will see HMAX will be able to kind of going up with that 50%. You have exposure for growth. So that's my take on this. And so if you have any question, if you like my content, just make sure you like, and then if you haven't subscribed, just make sure you subscribe so you can get all the update on ETFs and funds that you're investing your money for passive income or for growth. Thank you very much for watching. Till we meet again on next video. Bye bye.